My name is David White. I'm a financial trader here at Spreadex. Yeah. There's a huge amount of business is on individual equities. Whereas with something like the FTSE 100, it's the reflection of the aggregate of prices of the constituents, in this case being 100. If you look at one specific share, you might have a more your chances of being able to figure out what's driving the price action might be easier owing to the smaller amount of information that you need to look at. So if you're looking at the FTSE 100, you not only need to look at the macro picture, so the demand for risk, the overall sentiment in the market, but then you might have to look at the sectors like financials, basic materials. Like the FTSE 100 has a very big basic materials listing, so it sometimes trades as a proxy to that. Whereas if you were to pick an individual stock, like take Vodafone for example, well then you have to look at the component parts that make up the what's likely to drive the price. So that can be less work or more manageable than trying to guess, you know, if the FTSE's moving higher on financials, but then all of a sudden good news comes out for basic materials from some China PMI data or manufacturing data, then the FTSE 100 might rocket in price. Nothing to do with financials, but it's actually basic materials. So these are things that you might not be able to readily predict, whereas with something like Vodafone or Barclays, you might be able to look at the earnings and look at to see what the market believes the earnings are going to be, what the growth factor in the stock is, how much you're paying for the assets, so things like price to book. And you can make maybe a fundamental assessment of the value of the company, and then what the market believes other participants are willing to pay for it, and make your decision based on that. So we do see lots of people dealing in individual shares because they are able to, I guess they think they can manage the information more easily because there's less of it for an individual stock. Oh, I mean, here at Spreadex we're specialists in equities, so we go from microcap stocks, oil and gas, mining, pharmaceutical, right the way through to international large caps like, you know, Research in Motion, now Blackberry and Apple. So we cover pretty much anything, and the good thing here is if it's not built on the website, we will build it for clients. So we're just as likely to trade a market maker stock like Lenny Gas and Oil, or another one like that, for example, Scancell Holdings is a pharmaceutical company, as we are something like BP or Barclays or something like that. So we try and cover absolutely everything in terms of equities, and as a result we see lots of business in it. We do the 350, which includes the FTSE 100, the 250. We also do AIM listed, so alternative investment market, and we also do non-350 shares, so those that might not be there. So we basically anything that's listed on the London Stock Exchange we will look at to offer for clients, so long as it's above a 5 million market cap, because if they're lower than that then it could be notoriously difficult to trade. It could be very illiquid. So, but we will try and offer pretty much anything. We've recently actually made market maker stocks. You know, we did something like Quadrise, for example. We didn't actually have open to be being dealt online, but we've since made improvements in that area where you can now deal online. But it may be the case if you, for example, you have two market makers offering 50,000 a piece, and somebody wants to come along and buy 200,000 shares, then we may well, as the client makes the request, say, please phone in, this is too large. So if we can deal online, then we will, but if maybe the liquidity isn't there for the client to get filled, then we will say to them, please call in and we can deal over the phone.